Welcome back to another Calgary real estate market update with us here at Redline Real Estate Group on Redline TV. Today, as always, I'm going to be answering that age-old question that we get all the time about how is the market, just based on the stats and numbers and my own analysis from everything that came in through November 2020. In the first half of this video, I'm going to explore three key segments: the sales summary, the inventory story, and the pricing picture. And then at the end of the video, I'm gonna pull everything together in my advice segment for both buyers and sellers. If you've been following this series for a while, you may notice that at the very end of the video, I report an investor segment. Going forward, I've cut this out so that if you're an investor looking for that specific information, just follow along our YouTube channel because you'll see that is going to be dropped into the real estate investing tips playlist. All right, let's get right after it. First, as always, let's talk about our sales summary. The sales summary for this month was actually very simple. It was another blowout month, especially for it being the second last month of the year. In November, we recorded a total of 1,437 total sales within the city of Calgary limits. This was up 25% over the sales we recorded in November 2019. Quite a bump yet again. Now, to put this into perspective, because numbers can just be numbers unless you add some context to them, I went back into the year of 2019 to see when throughout the buy-in season did we record about that number of sales. And guess what? That number was very close to what we did in April, which is the early part of the spring market of 2019. So here we are, the last month as I'm standing here recording this and reporting that our second last month, November 2020, had a month that nearly equated to one of the run-up months in spring of 2019. That's incredible, completely unseasonal. So let me show you this in a few graphs. All right, in this first graph that I'm going to pull up, this is the November sales per day metrics. What you'll notice, there's a trend line. And as you see that, it's basically flat. Now, in this earlier part, I mentioned the word unseasonal. Seasonally, we would see the sales per day number generally trend downward all the way towards Christmas. But yet again, the resilient Calgarian market has been able to maintain a flat sales per day number all the way through the month of November 2020. Now let me pull up the second graph just to demonstrate this in a different way. This graph represents the weekly sales numbers as it relates to how they were at this time last year. And what do you notice? All of the graph is above zero and significant for most of the month. As you will see, we even started to create a bigger gap between last year and this year as we went on throughout the month. Another impressive set of stats at this time of the year, especially during the continued pandemic. So let me comment a little further about the ongoing demand in our market. Once again, I'm going to pull up another graph, and this one is our demand graph. This is the active people out showing today, and then also showing what we were doing last year at the same time. As I've mentioned in most of my updates this year, there's a significant gap between how much showings are going on now versus the same time last year. As we sit here today, the gap is the greatest that we've had all year long. Right now, we are 161% more showing demand than we were at this point last year. Now, out of curiosity, I wanted to pull up our market and compare it to what else is going on in North America. So I did. Let me pull up that big graph here again. You'll see same graph, but now this is all the stats relating to North America wide. What you'll notice when you look close here is their graph doesn't look quite like our graph, does it? For once, we are a bit of the shining star happening, where our market has been vastly underperforming for the last 6 or 7 years. When we compare it to North America, right now, our showing and our demand is remaining much higher than most of the other big North American cities. Good on Calgary for keeping things rolling. Okay, but I digress. Sorry for taking you down that little rabbit hole, but I thought it was a little bit of information that you'd like to know. A little positivity goes a long way. So back to the sales numbers. Not all markets, as always, are performing the same way. So let me break those 4 market segments down for you right now. The detached home market, again our biggest market, saw a significant bump, 25% greater sales this month versus the same month last year. But that's not the best one. The semi-detached market just blew that out of the water with a 50% sales increase over the same time last year. Row houses and townhouses, they followed suit with the detached as well, outperforming last year by 25%. And even our sleepiest market, that apartment market segment that's been lagging behind the other 3s all year, finally flipped the switch. And this month, it outperformed last year by 12%. That's a good news story for that little market that we know it can get some momentum behind if it just tries a little bit harder. Now, as always, on top of that, there's one extra layer, which is the price ranges. If you're interested in learning about how your price range of homes in one of those 4 market segments is performing, please reach out and we'll connect you with somebody who can give you that specific information for your very specific scenario. Okay, that's it for the sales summary. Now I'm going to rip over to our inventory story from the month. Let me start this segment by pulling up a graph. This graph is the listings per day coming to market. What do you notice on this trend line? From left to right, from start to end, you'll see it trend downward. And that's what we would expect at this time of the year as we negotiate our way through to December, which I am now. Now let me pull up a second graph. In this second graph, this is showing our total active inventory versus where it was last year. Again, as we look close at this graph from the November 1st dot all the way through to where we are now, you'll notice the active inventory continued to decline versus last year. Now in this third graph, it basically paints the whole picture. Check out this one. You'll see we saw a significant step-by-step movement all the way down to where we are now. That is total active inventory. And what this has just shown is a nearly 800 property decline throughout the month of November. It's a significant drop. So pulling it all together, we listed 7% less homes in November than last year, and we're currently sitting with 16% homes than we did at this point, trending into December 2019. Once again, all 4 property types are going through something slightly different, so I'll just lay that out here for you. The detached market, it's sitting at 25% less inventory than last year. It's a lot. Once again, the semi-detached market, it's the star of this stat, just like we were in the sales. It's sitting at 32% less total inventory than it did have on the market at this point last year. Row houses, they're sitting with 5.5 less inventory. And in the apartment market, it also saw improvement. It's currently sitting with 6% more inventory than it did last year. But when we go back to last month, it was as high as 9. So it's improved its total inventory throughout the month. That's another good news story. Okay, now it's time to pull the inventory information together with the sales and discuss our pricing picture. So maybe you're like me as you're listening to this. You've heard all the sales info, you've heard the inventory messaging, and you're thinking, maybe there's a good chance pricing did okay as well. And it did. For the 6th straight month, we've seen a month-over-month improvement in our benchmark sales price. Our benchmark sales price is currently sitting as a city at $423,600, and this is a 1.6% increase over last year at this same point. Again, all 4 market segments acting a little bit differently, but these ones are a little closer than those other stat points that I pointed out earlier. The detached home market saw a 2.9% increase year over year. Coming in second place is the semi-detached market. It saw a 1.3% increase year over year once again. The row house, again coming in third, basically flat, but it did gain a little bit. It's up 0.46%. And then our apartment market, lagging a little bit, but nothing to really be too concerned about. Year over year, it's only seen a minus 1.1% decline on its pricing. So again, very flat. If you wanted to know a little bit more information, that's why I want to pull up this big graph. This is one that our real estate board provides, and it shows all 8 districts around the city and how they're performing when it comes to their average price points and their year-over-year changes. So just take a peek at this graph just for a few seconds to know where your district lines up with what I just spoke about. So it's one thing to report on where pricing is, but I also like to give myself as much of a chance at my own crystal ball as I can. If you've been following our segment for a while, you see I bring up this 30-field chart every month and I comment on it. Well, what this is my indicators that tell me, should I be concerned in the different property segments about my pricing? Will my price go up, or is there a chance it may go down? In this chart, you'll see green means good, red means bad, yellow means kind of irrelevant, just baseline. The more red we see, the more risk. The more green we see, the more upside, or at least chance to pull off the stabilization through the pandemic. And I'm happy to report that when I did this month with all of the most recent data, there was only one of the 30 fields with a red. This is the most optimistic the indicators show about us being able to push off any future price declines than I've seen in many months. This is certainly good news. If I were to have polled you March 12th when we released the state of emergency, there is virtually nobody in Calgary that would have suggested that if I was moving into December of 2020 and the pandemic was still here as it is, that we'd be sitting this strong. So again, strong, resilient Calgarians holding things together. Okay, well that's it for my data analysis section. And now I'm going to transition to our advice segment to pull it all together and give you something to think about as you head back out into the world. When I'm answering this question, how is the market? It's one thing to hammer you and my agents with the data. But in reality, there's something more that I like to talk about most. The data is great, gives you context. But really, what I want to talk about is the pace of the current market. When I talk about pace, I do it in 2 ways. It's sales to listings ratio, kind of like the absorption rate, how fast things are being absorbed on the market, as well as month of supply. Those are the 2 things I'm going to talk about here. Let me pull up this graph first. This one's the sales to listings ratio graph. This one goes all the way back to the middle of May when we started to come out of this thing for the first wave of the pandemic. And it trends it all the way to where we are now, December 2nd, as I record this. In short, the higher the number on the graph means the higher the ratio. The higher the ratio, the better the market is. The higher the ratio means the pace of the market is faster. We start to see the proof in the pudding when I speak about this sales to listing ratio improving in what's called the days on market. And as we finished the month of November, guess what? That improved too by 14% over last year, same time. And guess what? We've seen the days on market improve across all 4 property types. Great news. Okay, let me talk about that second metric, months of supply. So let me pull up this graph to show you that over the same timeline of the last graph, middle of May to right now. In this case, as the months of supply decrease, the pace of our market increases. As we finished the month of November, we were sitting with a total months of supply at 3.5. What does that mean? Well, I went back to the stats November 2019 to see where we were at the same point. And guess what? That number was 5.2. Now, I'm no mathematician, but that's a significant change, which shows the pace of our market and the health of our market is much better positioned heading into the Christmas season as it did last year. Okay, so for those in the market buying and selling, make note of this. For the buyers out there, what are you going to expect? Well, we'll see another big drop in inventory throughout the month of December and even potentially in January. What that means, if you're out looking and that demand, if you remember back to the beginning, the demand is still so high. Don't be surprised if you're not shoulder to shoulder, not physically, but shoulder to shoulder with many other buyers out there looking to pounce on their next best home. So be prepared, as I've been saying over the last couple quarters. Be ready to pull the trigger. And don't worry that you're overpaying on these homes, because the market's healthy, but it's not hot. So you don't have to worry about overpaying and having that buyer's remorse. I promise you. Okay, for my sellers out there in the market, what information do I have for you? Despite all of the good news that you've heard throughout this update, there is still kind of two markets happening right now. If you're priced well, you sell. If you're priced slightly over, you don't. And the buyers are smart enough to overlook you because, as I mentioned, they're not going to overpay. So like all other parts of the year, right now, if you're on the market or coming, don't be greedy. Be fair, be realistic, and the market will find you, I promise. But don't be greedy. Don't be greedy. Now that advice is true for the detached, the semis, and the rows. Despite our apartment market having a much better month, it's still a long ways off from being healthy. So please, if you're an apartment owner coming to market, you need to make sure that you dress that thing up, you're pushing hard, and you're giving a very strong price to the market. Well, that's it, everybody. Once again, thank you for listening all the way through and coming back again. I put a ton of energy to deliver the most accurate and actionable set of market updates for you here in the Calgary market. If you like what you see, give me a like, subscribe if you haven't, and please, if you've got something else you'd like to know, put a comment in and share this on to a friend that you know needs this information. So have a fantastic month of December. Have an incredible holiday season, and I look forward to reporting on the way December finished and how we're about to start 2021. Wow.